Welcome back to YBI, where we discuss ways and strategies on how to better your financial selves. Zion and Roman back in the building. What's good? And again, I'm in another undisclosed random location because you know what I'm saying. We playing Where's Waldo version of Where's Zion in my house. So
Where's Zion in my house?
Yeah,
I'm
gonna
guess.
Well, you know where I'm at because you were here last week. So you know
That's true.
Yeah.
Y'all didn't
you
miss
know
that. Go back and watch it, like the fusion pose. Where Zion and I were together in her episode.
Well, we went the wrong way.
Oh yeah.
So.
Well, I don't know. I'll just hit the mic.
Okay, cool. What's up, man? How was your holiday? Welcome back. You know,
it was good.
Back. Well,
it was good. Holiday. Had a birthday through there. It was a good time. Saw all my folks, all my people. It was great. I loved it.
Yeah.
Couldn't ask for it.
Yeah, I mean, and it's amazing because now is holiday season and having birthdays right in between there is always lit. My birthday was right before the holiday, and then we get the two holidays right after. So, always exciting.
Okay, I know we just had a little camera glitch there. Microsoft Teams is deciding to do what it wants to do with me right now.
Okay, cool. But we are back. So today we are discussing taxes. It's coming up on tax time, tax season. Now is the time when you guys will probably start looking at W-2s, 1099s, when you'll start, needing to readjust your W-4s. You should be preparing for getting your refunds back, and we're going to hop into an explanation of all that fun stuff. If you haven't watched the last couple years of when we discussed tax time, we had a CPA join us. This year it's just going to be us, but if you need a little bit more in depth from a CPA, go ahead, check that out. Those videos are linked on our page or something. I don't know.
We'll link it down for this one. We'll put it in the bottom of this one.
Boop. We'll make it easy for you, I guess. All right, so let's hop into it. All right, so first question that we have to answer that I'll pose to you is, what are taxes?
Taxes is what we gotta pay to the government. It's just what we have to do. It's part of life. You gotta go into it. There's other portions of that that's qualified in that same kind of money taken, not money taken, but money we just have to pay out back to the government. We have to do for living in this country. Part of that is also part paid off to like Medicare and like Social Security. But a good portion of that just goes straight to the government to fund all the things the government does.
Yep. So our taxes are so we have our income tax, which is what you see taken out of your paycheck. Then you have like sales tax when you purchase items, things, gas, whatever. You have sales tax, not gas, but you have sales tax.
Income taxes.
Yeah. So there's a wide range of taxes in general. We're specifically talking about we're specifically talking about the income taxes here, and how you're going to personally be affected moving forward in 2024, what the changes are going to be. So let's just hop right into that, I guess. Tax brackets for 2024, they're changing.
Man,
are they not?
They are changing. Let's show the people what they're looking like.
Yeah. So I mean, for the most part, in theory, this is going to, and I put this in air quotes very heavily, help individuals, because as you can see from the screen that Roman's showing now, it's saying that I have it up on my other screen over here. It's saying that for married couples, you're going to increase your standard deduction by $1,500 from 2023 to 2024, and then in single individuals are going to increase by another $750 for your standard deduction. So what's the standard deduction?
Standard deduction. It's $12,500, from which you usually can just standardize deduct from your taxes every single year against itemizing them, or you can usually choose either option. If a lot of you have probably used a lot of free tax software, or if you've even gone to H&R Block or Jackson Hewitt, something like that, they usually ask you right then and there, do you just want standard deduction or do you want to itemize it? For 99% of Americans, I want to stop sharing this, standardized deductions are actually pretty much easier because they just do the $1,250. You're not usually spending more than that in taxable deductions to qualify for that. But what I have to say before any of that is the best advice is to talk to a CPA. sometimes is the best thing. They're certified in this thing. Zion and I are kind of telling you our stories and kind of what we know about our facts and such, but talking to an accountant is one of the first and best steps you should do, especially when you start thinking you're making some money or you don't know what's going on. It's about time to talk to one. Especially with TurboTax and all those acts, you end up paying the money anyway. You might as well pay for a good service from somebody and get that from them. I'm just gonna throw that out there.
Yeah, it is a very good and can be very beneficial if you, one, don't know what you're doing, or two, if you have complicated taxes. So for business owners, you're typically a little bit more complicated. You're going to have 1099s, you may have W-2s, you may have 1098Ts if you're in school. All of these are just things, documents. If you have investment accounts and stuff like that, you end up getting, I don't remember what the forms are called for those, but you get investment forms.
1099 divs for dividends. You get 1099 INTs for interest. You get 1099 in your K. There's and it's especially when you start having gig work or start having these things kind of pile up, is when it's good to talk to the accountant, because you're like, what is all this paperwork?
Yeah, so
at least for me, I freaked out. I don't know about taxes.
I didn't freak out because, we had our CPA on before and we just chit-chatted with her, and life was great.
Like her both wearing red. I just realized that.
I mean, that's the color
Christmas
of the show. There's
Christmas
green
time
over there. There's green up there. There's red behind me.
I got green in my trees.
It's a vibe. So if you're having like a very simple, like you just work a standard 9 to 5, you're getting paid W-2, they're automatically taking taxes out. Your taxes are typically going to be very simple to do. You can hop on to your TurboTax or, your H&R Block, and you can typically, or even IRS.gov, and you can file for yourself, typically for free, depending on the state that you live in. So filing is a very simple process. You literally just take the form that you have, the W-2, and it literally just guides you. It will say box 1A, and it'll say, what's the number that's in box 1A. Typically it's not a number because it's going to be your name, but 1A, and you fill out 1A on, whatever platform that you're using, and you just go down the form, and it's very simple. From that form, you're going to typically have the standard deduction, because you probably won't be qualifying for anything above $12,500 that's considered, like tax-free, kind of like quote unquote tax-free money. That's what the government automatically says. Hey, you've paid us X amount of dollars all year in taxes, and we're going to say that 12,000 of that was going to be a wash, and that's what your standard deduction is. However, if you have a business, if you're an entrepreneur, if you're going to end up with the 1099 and you're keeping track of your receipts, that's how you itemize. So let's say that for my business this year, I had to buy a computer, I had to buy a monitor, I had to buy a brand new car, whatever it was. All of those things I need to keep the receipts for, and then I can write them off down the line if they are in fact tax deductible. Again, when it comes to looking at the things that are going to be tax deductible, how you can itemize, there's a breakdown on the IRS's website, or you should talk to an accountant to make sure that you're itemizing, because you can't just write off everything. You can't just say, well, I was hungry, I bought lunch, and I decided that, it was going to be on the company's dime. That's not how life works. So make sure that you're looking at those things very intently, because in the event that you get audited, you want to make sure that you have all your ducks in a row. So for Roman and myself, who own businesses and are doing other things, what's an audit?
What's an audit?
That's a good question. So an audit is when the IRS or a government agency decides that they want to or need to come and review the factuality of what you've claimed on your taxes. So if you say, hey, I made $100,000 and $100,000 of that was all spent on tax deductible items, all of that needs to be accounted for somewhere. So you need to be able to prove, like, for a fact that you spent all of that money for tax deductible purposes. So in the event that you get audited, which is just, again, a government agency saying that they need to come and review the books that you have, you need to make sure that you have all your ducks in a row. So Roman and myself, for YBI, we have a share file where we can keep track on Excel of what we spent, how much we spent, when we spent it, what is it tax deductible or not. But all of our items that we purchased throughout the year, for podcasts, for merchandise, for travel, for lunch, all that stuff is all listed in one spot. And you want to make sure that you have all of that listed somewhere simple, somewhere clean, where in the event that you get audited, you have all of your files there for you.
To also go on that to anyone with a side gig, a side hustle, if you're doing like Uber, Instacart, DoorDash, anything like that, a lot of those things do pay 1099s unless you're in certain states and you're qualified as an employee or W-2 from them. That means the mileage you drive, the gas you put in your car, the electricity you put it in, if you got an EV, a lot of those things can end up being business kind of tax write-offs in the 1099 case. Just as another
What's a 1099?
a 1099 is a tax form that basically it's basically when a company pays you more than $600, $599, they have to tell the government about that. They have to send them a form and say, hey, I paid Zion $1,000 for this job. They send you a 1099 saying like, hey, we told the government that we paid you $1,000. They're expecting their taxes on that $1,000. That's what a 1099 is. It's just a form that goes through the filing process of then telling the government how much you owe them.
In layman's terms,
you will get that.
The simplest thing is, if you have a 1099, it means you did not pay taxes. If you have a W-2, it means taxes were taken out of your check. 1099s mean taxes.
And there are many different kind of 1099s. Depending on your case or depending on what kind of job or contract you have, you might get different ones depending on a bunch of different things. Maybe we'll reference an IRS link or something for you to go research those if you want.
So again, on the link that Roman had for you guys for the IRS website, a beautiful thing that you guys should check out every year, because typically there are changes to tax brackets. Tax calculator is a great thing that you should use. You should at the beginning of every year take a look at the tax calculator to make sure that you're pulling the correct amount of taxes. I know that a lot of people are of the mindset that we should get a huge refund, and they're really into that. But that's not the move. It's not the move. If you are getting a $20,000 refund, you are withholding too much taxes throughout the year. You're just letting the government keep your money without any interest or anything for no reason. So if you use the tax calculator, it'll actually predict what you should be withholding. So by the time you get to having your refund come out, you still want to have a little bit of refund so you don't owe the government if that's what you choose. But at the same time, you don't want it to be something astronomical. If you're getting like $500, $700, that's reasonable. But if you're getting $18,000, you may want to, take a little bit of that money and spread it out as money that you can keep in your pocket throughout the year. You can invest that, you can do other things with it rather than just giving it to the government for them to just give back to you in April.
Now there are credits that you can use. There are credits for every situation, even when you're doing a standard deduction, 1099, whatever your case may be. There's a bunch of them. The U.S. tax code is very complicated, so it's really good to just have go in there with a system and get prepared early. That's kind of where we're dropping this episode. Maybe even kind of late in some people's cases to kind of start getting their ducks in a row. But start early enough, even now, just because the tax season ends. When again, Zion? I'm blanking out on it. Is it April 20th? Yeah, when is the last day to file taxes? Usually, is it March or April? They kind of extended it a few times.
March? Oh, let's Google it.
I'm looking it
That's
up
what
right
we're
now.
Here for. Yeah, so we don't know everything. But I'm pretty sure it's March, isn't it? I think it's March. In addition to what Roman's talking about with tax credits,
April 15th. It's April 15th. So I was close. I said 420, but close enough.
In addition to the tax credits that Roman's discussing, if you're going to school, make sure that you have forms that come from the school, because if you've paid interest to the school, some of that's tax. You can write that off, not write it off, but you need to file that on your taxes. If you own a home, you need to make sure that you get the tax bill for that, because you can a portion of that you're going to end up being able to write off some of the taxes that have been paid. If you have children, make sure that you're claiming your children if possible, because the tax incentive for children went up as well. I believe it was $7,800, if I'm not mistaken,
for a tax credit
for children.
I'm not sure what that was on it either.
I think it was 78. I think it was 7,400 and it went up to 7,800. Yeah, here it is. The tax 2024 is 7,830 and it was 7,430. So again, that's just money that you're going to be able to use to claim more or to get more back on your taxes. We are not at all, and put this in all caps, we are not at all telling you to fraudulently put anything on your taxes that is not true. However, we do want you to make sure that you're getting back all the money that you're supposed to get. So you just want to make sure that you're claiming the right things, that you, if you are or if you're supposed to be getting money back for anything, if you're itemizing all that stuff, we want to make sure that you're getting that money back and you're able to use that money to invest in things.
It's what's one of the best ways you can do that? Talk to a CPA.
Yeah.
Trust me, they want to help you out and maximize the most credits and refunds that they gonna get for you. Mostly because some of them charge a flat fee, some of them charge even a percentage of the refund, depending on who you kind of go talk to and who you go to. But no matter what, these people are trained in it. They know what they're talking about. That's where Zion and I have gotten a lot of this information. Is from not only looking at stuff ourselves, but from talking to CPAs and working with them for years. So,
something that a lot of people miss when doing their taxes is if they've given to charity, charitable contributions, that's churches, that's Goodwill, that's all of those things. You can also write some of that stuff off. So if you've given to a church, they should typically they typically have a form that'll just track how much you've given and tithes, offerings, whatever. If you've given to Goodwill, they typically have a form you have to ask for it, but you can write how much the values were of the things that you donated. And that's just another way that you can also, add that to your taxes. But that's something that people typically forget about, but don't.
Yep. I got one for my W-2 1099 people. On your W-2, you can always edit your tax withholding on your W-4, and that tells the government, at least federally or even stately, depending on how that goes. Depending on states, you can tell them to withhold extra amount, depending on how much, if you know about how much you're making on your freelance jobs. And that's a way right there. You don't have to worry about even doing your quarterly taxes, which we didn't get too much in it on this episode, or having to worry about end of year taxes if you just withhold extra. That's personally what I do with my taxes. I've started taking about extra from my W-2 jobs to cover for my 1099 jobs, and it works out kind of evenly on that stake too. Okay, all right, time for Sterling Statements and Santa Claus Rally. Do we think it's going up or down? Markets of about 5% over the past month, 6% over the past about 6 months, and that's on the S&P 500. The Santa Claus Rally, that happens to be the last 5 trading days of the outgoing year and the first 2 trading days of the incoming year. So it just happens to be a time when markets go up just because people are feeling good, people are spending a lot of money, fourth quarter tends to be the most busiest time for retailers because people are spending all the money and buying all the things. So it's really not what I think is going to happen this year. Right now, the markets are very much going up on the thought that the Fed is going to be either holding interest rate hikes or starting to lower them even. I gotta say, I'm gonna go glass half full on this. I think there'll be a Santa Claus rally going into next year. Who knows what happens after that? But I think I'm gonna ride the holiday cheer so I can have a good rebalance.
Okay, you're on your own there, buddy.
What? You
Sterling
don't think
statement.
so?
I mean, I tend to be a little bit more cautious. But yes, I can definitely hope. I can definitely hope for one. I, just be a little bit more cautious. I'm a little bit more pessimistic, I guess. I don't know.
I would say my portfolio finally is looking pretty green towards the end of this year, so I'm hoping it stays that way.
That's what's up, because my portfolio was not. Well, actually, I'm lying. It looks fantastic. I'm completely. That's not true at all. Sterling statement for me. I don't know if we've fully explained how sterling statements have shifted over time. But what we want to do with sterling statements is really just highlight some of the good and positive pieces and things that are going on in our lives, or the things that we predict are supposed to happen. So that's how sterling statements has kind of shifted since the beginning of the inception of the show.
I'm cheerful on the Santa Claus rally. So
yeah, so he's excited about Santa Claus rally. Just we can talk about it. Yeah. So for me, something good, positive, etc. that has happened right now, I am into this candy that my sister got me from Buckingham Palace. My sister just came back from London and she got me some candy and she got me some soap, and I just want everybody to know that if you have the opportunity to go to Buckingham Palace, their soap is fantastic. So do that.
Is it like all
candy,
natural
enjoy
herbal
life.
soap? Is it?
I have no idea, but I know
the chocolate.
Man, I'm telling you, the queen smells fantastic. If this is what she smells like, she smells fantastic. But Yes, that's my sterling statement. Go to London, get some candy and some soap.
Talk to a
for
CPA.
yourself and your loved ones. Yes, and talk to a CPA. Probably not while you're in London though.
No.
Get us out of here, man.
All right, y'all. Y'all know what it is. Over here at YBI, we may be young, we might be broke, but we are always investing no matter what. Holla at your boys.
Thank you guys so much. Peace.
Peace.